Hello everyone, this is the Sterling Price Trader. So this video will be very short. I'll be making it as quick as possible, and I'm making it to actually explain and to answer a question that was asked by somebody in my YouTube channel in the comment section of one of my YouTube shorts. The question was the time. It was asking what's the time to trade the silver bullet in the UK and my best time frames. So obviously, I think the person is from the UK access region. So I won't be actually saying the specific UK time because if I say a UK time now, I can be wrong due to what we call the day light savings time. Once it happened, there used to be an alteration, a 1 hour ahead or behind based on the country or region you are. So that will be different for someone in, let's say, someone in Canada and for someone in other countries, an Ethiopian and Egyptian. So it's going to be different, but I'm going to be giving what everybody's going to be able to use. So first thing first, once you come to the trading view, I don't know of any other platform, okay, but you can use the trading view. I'll be showing like two options you can use. That's always correct, always, regardless if there's the daylight saving, whether you're observing it or you don't observe it in your country, this is always correct, okay. This is always correct. And but before I go into that, I want to really emphasize something very quickly. The silver bullet the silver bullet is the ICT time-based algorithmic trading model, and the I think the I think the cup of tea of this is like the best thing, like the fascinating thing about this model is that it works on all asset classes, like all asset classes. Is it crypto? Is it for? I've not tried it on crypto. Have I? Probably once, but I've done it multiple times on the crypto and the indices, that's the stock index features rather. Like it works on all asset classes. You're trading gold, so you don't have to be okay, this is for only forex. No, it's for everyone. So it works on all asset classes, and this is not my, it's not my concept. I didn't created it. It was created by ICT, so you can easily go into his YouTube channel and check it out. He gets the credit for that. I didn't invent it. He is a, he has the authorship and all those kind of things. So he did it. But I understand how to use it because I've practiced it over and over and over and over more. Like, I've practiced it so long a time that I know how to use it. So and that's my model. And so that's one thing I want to emphasize, that to give the credit to whom, let the honor go to whom honor deserves, to whom deserves honor rather. And the other thing is, you need to know where price is more likely to go to, because I can show you this silver bullet time and everything in my time frames, but it's going to be very completely useless if you don't know where price is going to. Like, you have to know the highest probability draw on liquidity, and that comes with experience. Study. You have to backtest. You have to really study. And I'll be, just in a few minutes, I'll be talking like, do you really want to be trading? This is for everybody, by the way. Everybody listening, if you have interest, you probably have something you want to listen. Like, think about it. Do you just want to be in a trade and just make a couple of $100, a couple of dollars, hundreds of dollars, and just go away and still be working as a 9-5er? Still want to be slaving, you want to be working? Or do you really want to master trading and hopefully quit your job, having trading a full-time trader? Is that your goal, or are you just trying to get some lucky runs? What is it? Casino, people do it in casino. You just go there, get some luck. And there are some people who are professional casino players. So do you want to become a professional trader? Is that a casino player? Well, professional guys, professional gamblers. So are you really want to be, you want to be a trader, or you just want to gamble and make a few couple of $100? If you want to do that, then probably you might not really bother about investing so much time, because it's not gonna be useful for you if you don't have the mindset of sticking with this long term. So you have to put in the work to know where price is going to go to. That comes with experience, and you can learn all those in, ICT has a compendium. It's a YouTube library. You can learn a lot of things there, a lot of model there. You can learn lots of things. So that will actually help you and make your trade pan out more. The model is very beautiful, it's good, but if you know where price is more likely to go to, man, that, like, you're made in. You will do crazy things here. You will make so much money if you know it. Like, I have, with experience, 90% of the time, been right to where price is more likely to go to draw to. That's one of the things I am more stronger in doing. Like I am very more accurate in determining where price is going to go to next. I might not be able to be super great in telling you, okay, price is going to be turning around here, or like it's going to turn around here and going to be trending for a couple of months. But where is it going to go to for this week, for next week? I am more times than none, I'm right. I know how to do that, and it took me experience. But now, like, it's boring to me. I've done it so many times. Intraday, long term, I've done it. So you need to have that because that's what you're going to rely on. So I want to touch on that because there's no shortcut really. If you really want to make, you want to build a career, you want to make millions of dollars, you want to become a millionaire, you want to quit your job. If that is what you are doing trading for, then you have to understand where price is more likely to draw to. The highest probable draw on liquidity, and you'll be wrong sometimes. Sometimes I am wrong, but more times than none, I am right. So this is something you have to incorporate, So ask yourself, am I just trading casually, or did I really want to, do this thing and become a multi-millionaire? I want to do, you can make this a career. So it's the mindset. So if your mindset is to make this a career, welcome. But if you're just trying to gamble, well, you can take this information though, but to be honest, why just bother invest the time when you didn't want to do it long time? You have to be long term with, you have to be intentional with everything you want to do. So real quick, going straight right into the time. I think the time is here. Okay, before the time, in 1 minute, this video won't pass. It will not be exceeding 10 minutes, by the way. So I want to let you know the expectation, because now you see silver bullet, you think, okay, you're going to trade, like 200 pips. No, that's not the model. No, we don't do 200 pips. You can, and I think I've done that also. 200 pips is like a daily range. It's possible, but that's not the framework for this model. 200 pips is not the framework for this model. It's not. I'll tell you what the framework is. It's a low-hanging fruit. Sorry for the distraction. For this model, sorry for that, it's a car that just gets started. I think people are getting out of here. So the framework for this model, like the expectation is 10 pips. Like once you want to trade now, okay, I want to trade the silver bullet. What are you looking for? Your setup must be able to deliver a minimum of 10 pips, 15 pips rather, 15 pips. If the setup you are looking at is not being able to give you a 15 pips potential, a minimum, then you do not trade that session for the silver bullet. Wait another section or another day. Wait. It has to have that potential of giving a minimum of 15 pips. It can be up to 150 pips. Good. But a minimum, not 5 pips, not 10. On the Forex, a minimum of 50 pips. And for the indices, if you trade the indices, a minimum of 10 points. That's 10 handles. I think that's 40 ticks. So 10 points, 10 handles, or 15 pips for the Forex trader. So that's your expectation. If what you're trying to trade, the setup you're looking for is not giving that potential, then find another time window, which I'll be talking about right now for the silver bullet. So that's it. And for the time here, trading view here, when you come, look at like outside the border of the chart, right here where you see 30th, 6 o'clock, 18 o'clock, all this time. So you just long press on it. I'm doing this with a cell phone. So if it's a system, you might have to double tap or just hover around. Then once you long press on it, this is going to pop up. So this is trading views, whatnot. But I'm going to do it again. You long press on it, this is going to pop up. Then you click the time zone, not session breaks, time zone. So once you click the time zone, you look at here. My time is always set to New York local time. But for the sake of this video, I deliberately took it out and put it on London, which is here. You can see it. Okay, it actually has gone back to New York. So I actually put it here before I started the video. But based on, the default setting for mine, I already set it to be New York. So again, you long press here, just this, like here, below, outside the chart, here, where this time and date. You long press, then you see time zone, not section breaks, time zone. Then you scroll, and you find what? UTC4, New York. So once you type, toggle in the New York, that's it. That's the time. It doesn't matter if it's the daylight, if you observe the daylight savings, daylight savings is, in my country, it used to go ahead. My own country here is 5 hours ahead of the silver bullet. During the daylight savings time, which is I think about March, it will be 6 hours ahead. I already know that for my country. I won't be calling the time specifically because it can cause confusion. But right now, New York time right now is 11:15. That's one way. The video is exceeding 10 minutes already. Sorry, but I'm going to try to cover this as soon as possible. So I'll be going to the second way you can discover it. I repeat, you long press here, time zone, then you go in there and you do what? New York. That's it. That's the time. That's the time you'll be setting it to. Then I'll tell you the 4 instances where you should wait to be able to trade. The second way now is, you just go right to Google or Chrome, whatever you use. You head right there. No, this is not what I'm looking for. Okay. And then you type Eastern Standard Time. That's EST. Eastern Standard Time. Eastern Standard Time. That's EST now. So once you type that, you allow it to load, and what do you see? Look here. You can see here 11:16 Wednesday 30th October 2024 Eastern Time. 11:16. Now let's go back to Trading View. Here, as I hold it here, what is it? 11:15. I'm going to go right to the 1 minute time frame. What is here? Look below here. Look below here, like this right bottom. 11:17 just now, but it's 11:16 about a few seconds ago. Once again, I'll show you on the Chrome. You do what? Eastern Standard EST time now. So once you type that, you load it. You look at this. So if I refresh the page now, it should show us 11:17. You can see that. So 11:17 and 11:17. That's the time. That's how you can, like, if you do it on TradingView and you're not sure, okay, am I doing the right thing? Just go right to Chrome and type in EST time now, and you'll be able to see the time. So it's 11:17 a.m. here. So for my country, it's different. I told you I'm 5 hours ahead of the New York. So that's it. And now the time windows when you should expect it. Now we have 4. The first one is the London Open Silver Bullet. The London, every time I'll mention here is the New York local time or the Eastern Standard Time. They're the same thing. So anything I'm mentioning here, regardless of what country, continent you are, this is all New York. I'm not even using my own country's time, okay? So it's all New York local time. And I've told you how to set it. The first one is what? The London Open Silver Bullet. The time of that one is 3 a.m. to 4 a.m. It's always 1 hour. Like, it's just 60 minutes. You have no, it's just 60. If you don't see your setup in 60 minutes, then you wait for another section. It's all 60 minutes. 60 minutes. So London Open Silver Bullet, 3 a.m. to 4 a.m. I repeat, the first one is London Open Silver Bullet, 3 a.m. to 4 a.m. 60 minutes. The second one is the AM section Silver Bullet. The AM session Silver Bullet, 10 a.m. to 11 a.m. New York local time or Eastern Standard Time. The third one is the PM section Silver Bullet. The PM session Silver Bullet, which is what? 2 p.m. to 3 p.m. New York local time. I repeat, the PM section Silver Bullet, 2 p.m. to 3 p.m. New York local time or Eastern Standard Time. Okay, so that's the time. And the fourth one, with my experiences, I've seen it work better in the indices. That is the Nasdaq, the E-mini S&P, the Dow futures. I've not done so much on Dow futures, but I've done good amount of study on the Nasdaq and the E-mini S&P. So the E-mini S&P, the Nasdaq, I used to see this very, it's nice on it. The 3 p.m., which is the last one, it's also the PM session Silver Bullet. So there are 2 in the PM session, the 3 p.m. to 4 p.m. I repeat, the 3 p.m. to 4 p.m. New York local time. Also, I've done it. I have a video on it on my YouTube. On Forex, I've traded the 3 p.m. to 4 p.m. I've traded it. It's right on my video on my YouTube. I don't know what exact video it is, but if you want the video, you can just comment. So I can send you the link to look at it. If it's a short or the video, whatever, you're gonna see it. So I've done the 3 p.m. to 4 p.m. on Forex. I've done it. So, and it's working. It worked well. But the entry one thing you should notice, your entry does not have to be exactly, okay, let's say you want to trade the London Open now. exactly 3 a.m. you go there, you went short European dollar. No, no. You have to have a model. Like, okay, this is a model, but you have to have something you're looking for. Maybe a shift in market structure. Maybe a liquidity is purged. Maybe a fair value gap is traded to. At times, I wait till the 30th minute sometimes. And there's what we call macro. It's outside the scope of this, but I'll touch on it just in a few seconds now. The macro is, it happens this way. And I've been trying to find a way to be able to anticipate it beforehand. Sometimes I can't really say, but I can actually almost say, okay, I don't think, based on the economic calendar, I use that very well. But I've not been able to get so much consistent in knowing beforehand how to avoid a macro, like a macro silver bullet. A macro silver bullet is like from the hour window, let's say for the London, I'll be using the London now, let's say from 3 a.m., price will keep consolidating, chopping 3 a.m., 3:10, 3:30 until 3:50. Then you just see something. It trades to a PDRA, bearish whatever. It trades into something, and then it starts pulling. Then it runs really nice. It runs well, and in the macro is it's in 20 minutes. It's from like, okay, let's want through the London open macro. You start from the 3:50 a.m. to 4:10 a.m. So it exceeds the 4 o'clock by 10 minutes for macro. And by the way, your silver bullet, it doesn't mean that you have to be done by 4 a.m. if you're trading in London. Your entry just has to be within 3 a.m. to 4 a.m. Your entry has, if it exceeds that time, you don't just wait for another session. Don't enter. Wait for another session. But your entry has to be within that time. You can actually allow it to run longer than that time, maybe an hour plus, depending. But you just have to aim for little low hanging fruit objective. That's what you have to aim for. So that is the time window for the macro. I told you already, it's 3:50 to the 10 minutes above the silver bullet end hour. For the London session, the end hour of the silver bullet is 4 a.m. So 4:10 will be the end for the macro. For the AM session, the end hour is 11 a.m. So 11:10 will be the end for the macro end, because it's pulls in 20 minutes. In 20 minutes, you see most of the moves and something. It might continue a long time sustained, but it's just 20 minutes. That's a macro. But what I'm focusing on is the silver bullet. So that's it. So in case you happen to be there 3 a.m., you didn't see, it was just chopping around. Sometimes I just go in there. So when I take a loss, I wait. Let's wait till 10:50 if I'm trading the AM session. Then 10:50, I find something. There's a way price that, it's experience. So once it gives that signature handshaking of the algorithm, then I know, okay, it's time. Let me get into something, and I try to do the little I can do. And you have to incorporate risk management. You understand? So I hope you understand in this. Please, drop your questions if you're having any questions. And I think I'm done for this. And I can. Okay, the other part of the question is, say my best time frames. My best time frames, actually. Well, this is how I do. When I'm trading, like I am already trading. In the trade, during the trade, not pre-trade, not post-trade. In the trade, I think that's what people want to know. I use 5 minutes downward, 5 minutes, 3 minutes, 1 minute, specifically 5, 3, 1. So depending on how price is, most times is the 5, 3, 1. That's just the 3 I use, but I switched in between. Now, I told you about the macro already, like it will consolidate throughout, then to start spooling at the 50th minute. And with my experience, I've seen on the Forex, and sometimes in the indices, that 45th minute, it actually gives a better entry than the 50th minute. Not always, but I've seen it. That 45 minutes, let's say you want to sell, it gives a better premium opportunity to sell short on the 45th minute than the 50th minute. But the real macro that was taught is 50th minute. But sometimes I actually go in and the 45, and sometimes the 50th minute comes and take out the 45 high. And sometimes even the 51st minute still take out the 50th minute high. So I don't want to go too deep, because somebody might be like, this is a little bit complex. It's not. It's simple. It's easy. It's just practice. So my best time frames I've told you is the 5, 3, 1. I use the 15 minutes well, because sometimes once there's a news, and again, very important, please. If there's a high impact news event, 10 a.m., it is best, if you're not an expert, if you're not a professional, that is, if you're not trading for more than 3 years, 5 years, less than that, even if you're trading for that amount of time and you're just practicing this model for the first time, allow the news to hit first. There's a very, very, very critical reason for that. allow the news to hit first. Allow the news. So I don't want to just stay in here and be talking. I can just show you what it looked like directly, so you can just see it for yourself. To be easy for anybody just coming here, you wouldn't have to stretch yourself and worry about things that are not important. So let's see. I want to show you the economic calendar I used. So I have one downloaded. It's the baby peeps. So let's see. Okay, here. So this is the economic calendar for baby peeps. So let's see. Like, I wish I could make it better than this. I'll change the view for a while. Please permit me. So okay, good. So yesterday was Tuesday. Can you see here? Look at this. Here, right here. This is 10 a.m. All this is New York time, by the way, the same Eastern Standard Time. This kind of things, you've got to wait for it to hit. Don't try to go short before it. Wait for it, because you can go short and be right, and it runs up because it does a Judas swing, like a fake move, and it takes you out. It takes you out and it goes to where you want to go. So you wait for it to hit. Immediately it hits, then you can go in there and do what you want to do. So you can see it at 3 a.m., 10 a.m. You see, those are actually what supercharge our trade. You can see this high impact news also here. This is the economic calendar for this week. This is Tuesday, October 29th. Today is Wednesday, actually, 30th. This also is 3 a.m. You can see this. You wait for it to hit. You wait for it. Don't try to be in a hurry. Let's see Wednesday, which is today. What's Wednesday? Wednesday. This is 2:30, 4, then 5. Then let's see 10 a.m. if we have something. Okay, 10 a.m. is medium. At times, but most times, if you see a medium or high impact, it's better as a beginner or someone that is just practicing this for the first time. Allow it to hit. Allow it. If you go ahead of it, you might not like. If you have not so much of an equity, it really can completely disarm you. So it's very important. So those are my time frames when trading. I look at the 15 minutes time frame if there's too much of complexity, and the only time I switch, I stay more on the 1 minute. But once I see what we call consolidation for a sustained time, like if it's a consolidation that's exceeding 10 minutes, I go to the 5 minutes to be able to see a macro perspective for the lower time frame, like what's really going on. Are we going to reverse, or is it just a normal distortion? And I use the 15 minutes because sometimes if you see a very high impact news event, it can destroy for the first 15 minutes, like it will just keep destroying or just be ranging. Then after the first 15 minutes, it will just start going well. So that's why it's the 15-minute time frame, but these are my time frames. But before this, every day I start from the daily and I to the 4-hour to the 60-minute. I do my analysis for the day. It takes me, I already do my major analysis in the weekend. That's from the monthly, weekly. Then when I want to trade every day, I look at the daily time frame. What has happened yesterday? Where have we traded to? Where are we right now? Premium discount. What's going on? The most probably drawn liquidity. Everything. Then I go to the 4-hour from the daily, and I go to the 60-minute time frame, and then I go to the 15 minutes and 15 minutes 5 3 1. So that's how I go. But once I'm trading, I don't run to the daily time frame anymore. Unless if something is very rare, unless something very unusual happen, then I might, daily time frame when trading, I don't do that. It's very, very rare. Unless I want to show something, I want to make a remark, like a funny remark, or just kind of make some funny something, like okay, for you that think is impossible, but really 5 3 1. I use the 15 minutes also, but 15 5 3 1. So that's just the 4th time frame I use. I think I've answered the question of time to trade and the best time frame. So hopefully you find this video impactful. And there's one more thing I didn't say. When you want to trade, for you that don't know bias, and you look at the previous day's high, the previous week's high, the previous day's low, the previous week's low, previous section's high. Now you know the section, London, New York. So once you look at those sections, I can't teach everything in this video, but those sections are what you look at, those highs and low. Like now you can see how price is being, look at this. You don't want to be trading here. You don't want to be doing this. Look at this. It's not even moving. So today I didn't even trade the silver bullet for today because my kill zone already had been traded to. It had been traded to, and it was traded to about 8:30 here. It was traded to 8:30 about this level, right? I think here, 8:30 went into my kill zone, and by the time I was okay, this is yesterday, by the way. Sorry, today by 8:30. So there's a level I was looking at 8:30. at 8:30 it traded into it. It's an inefficiency actually in the 4-hour time frame, and you can look at here. There's an inefficiency here. So I don't want to do technical, but I'll just touch on this. Okay, right here. So that's the level I was looking for this morning. So this inefficiency right here, this is a 4-hour. I won't go to the 4-hour. That's the inversion fair value gap. So I wanted price to trade here. I've been watching it since London, but it happened to do that at 8:30, and by the time I came in, I saw it. Oh man, it's 10, and I don't want to chase price. You can see from 10, it's actually moved, but this is small compared to this. If it actually came here and traded here at 10, wow, man, I'll be doing all this. But it was what, 8:30. So even I didn't trade today for this AM session, and the PM session I won't be, because I'll be having some schedules for my day, and so that's it. You don't always have to, you might not always be getting the trading and all those kind of things, but more time than none, you will see trading, and you have to understand buyers and all those kind of things. So I've told you already, previous days high, previous days low, previous weeks high, previous week low, previous sessions high, previous sessions low, and all those kind of things. That's the framework. There are about 7. If you check ICT video, if you want the video, you can actually comment in the section. I can get you the link to the video. I'll try. If I can get it, I'll get you the link, and you can see it for yourself there. You can actually understand it better. But I think I've done justice to what I actually know, and if this video, makes some sense, you can give it a thumbs up. You can subscribe for more if you're just watching this for the first time. You can drop in your question. Like I did this video for someone now to explain it. So you can drop in your questions. I'll answer them. If it's something I can answer just direct, I'll do it. If it's something that needs a video, I'll try my best to do it. So I'm here for you. I want the best for everyone, every single one of you hearing me. I want my best for you. So, subscribe, do everything, and, let's keep the community growing. So have a great trading week ahead.